Hello everyone, my name is Max Monahan. I am an aspiring real estate agent in the greater Portland, Oregon area, and today we're going to be talking about the benefits to owning rental real estate. I was having a conversation online with one of my friends the other day who was wondering why rental real estate is such a fantastic investment. So today we are going to be going over a few reasons as to why it is such an amazing investment. Now, I want to preface this by saying this is my first video on this channel. I'm still trying to figure out the setup of the way that I want to do things. I think I want to use a whiteboard. I definitely want to be on camera, but unfortunately I'm not 100% sure how to do that at this current moment in time. So today we're just going to be using this online whiteboard. Doesn't this look great? Number one out of the list of things that I would like to talk about today is appreciation. Now, appreciation is something that, most people think about when you think about owning real estate. Now, historic trends show that your property's value will likely be worth much more than what you paid for, especially, 10, 20, 30 years from now. So when you eventually sell it, you'll get much more than you paid for it. If you look at historical data, which is obviously the best way to try and predict things, if you bought a home in 1988, and it's based on the median home price of homes all over the US, you would have spent around $87,000. Now, that same house today is worth $258,000 without changing anything about the home. So, aka in English, the median home price 30 years ago was $87,000, and today it's $258,000. That's a $171,000 gain, a 300% increase, just by holding onto a home and doing nothing for 30 years. And that's really the power of appreciation. If you just hold onto a property, buy it 30 years down the line, according to historical data, it's going to be worth 3 times what you paid for it. So that is number one. Now, principal paydown is the second thing that I've decided to write on this list. And so what do I mean by that? Some people won't know what I mean. And so when you have a traditional mortgage, right, a 30-year mortgage at a fixed rate, every payment that you make on the mortgage slowly gains the amount of equity you have in the property. So for example, if you have a $500,000 home, let's say, and you put, let's say, $100,000 into it, right? That's 20% into the property. So there's $400K that you're paying off in the next 30 years. After 30 years, you have full equity in that property. What that means is that you own 100% of the home, so that $500K before appreciation. And so let's say, for example, you have a rental property. Every time that your renter is paying their rent, they're helping you gain equity in the property, meaning even more money for you. So usually when people look at the expenses chart and how, all the expenses that go into having a rental property and the money that you get, people usually only look at the, profit that you get from the renters, right? And you should be doing that. But the little cherry off the top of that is the principal that's being paid down and your increase to your net worth that is being achieved by paying down that loan. So number 3, I decided to write down flexibility. Now, flexibility can be quite confusing to someone who isn't very, what's the word I want to use here? Very involved in the real estate world or doesn't know really a lot about it. But having and owning real estate is extremely flexible and is, you can be creative in so many different aspects. If you don't have a lot of time for work, outside of work to deal with the property, or you don't want to deal with the management of the property, hire a property manager. Do you love doing construction work? Is that your line of work? Do some of the renovations yourself. Don't have a lot of money? Find a partner to buy it with you. Real estate offers so much flexibility in so many different aspects, right? There's so many different ways to finance, There's different things that you can do if you don't have a lot of money, like sweat equity, where, you're working into the property by doing the renovations yourself. Some of them, not all of them, especially if it's fixer-upper. You can have huge possibility for ROI in some specific ways of investing, like the Burr method, which I'll talk about in a later video. You have so much variety in doing it, You have different financing options, different investing strategies, different renovation projects. There's just something new every day when it comes to it. So that is number 3 for me. Now, number 4 is the obvious one, right? When you own a rental property, someone's paying you to live in the property that you own. which is monthly rental income. It's relatively self-explanatory. It shouldn't be a very difficult concept to grasp. But if we're looking to the benefits, the main benefit of owning rental real estate is getting that cash flow, positive cash flow from your renter after all of the expenses. After the initial buying and potential repair process, you probably won't have to spend a lot of time dealing with the property as long as you have a good system in place, you've got a good property manager, and after you have enough rental cash flow to surpass your expenses, you can spend your time doing what you love rather than just doing a regular 9-to-5 job. And now that doesn't mean you have to quit your job, but it just gives you that freedom, that financial freedom to do whatever you'd like to do. And that monthly rental income is a way to achieve that goal. Now, number 5 for me is long-term financial security. More specifically, real estate is a fantastic hedge against inflation. So, basic definitions, right? Inflation in the US is around 3% yearly. However, real estate appreciation over the past few decades has been 6%. So by just holding onto a property instead of keeping it in cash or in a low interest savings account, you're not losing your money. It's a little bit difficult thing to explain in words, but a relatively easy concept to grasp in thought. But over the long run, owning real estate is a fantastic way to make money, just as I said, with appreciation here. But if you look historically, home prices on average in America have always gone up over 10 plus years, and it's been proven throughout time to be a sound financial investment. Possibility to buy below market value. Yes, you heard that here, right? Rather than if you're looking at a typical stock price, for example, right? Obviously, there's buyers, there's sellers, but there isn't really much room to maneuver in the process of getting those stocks. However, that is completely different in rental real estate. When negotiating for a property, you usually don't buy it for the initial price unless the seller is extremely adamant or the property is getting a lot of interest. Now, obviously, this definitely varies depending on the area, how many offers you have, how long it's been on the market, etc., etc. But if you're a good negotiator, you can really, really use your skills to make a lot of money and increase your net worth by a lot just by the negotiation process of how much you're going to pay for that home. So possibility to buy below market value is extremely fantastic. Stimulate the local economy. What I mean by that is that, for example, if you're doing a renovation project in your property, you benefit the local economy by employing local contractors. When you need a toilet fixed, you employ a local handyman. When dealing with buying and selling a property, you are helping increase local tax revenues and improving available housing in the neighborhood. So I see owning and buying and selling rental real estate as a fantastic way to stimulate the local economy. Being your own boss. This is another pretty self-explanatory one. Who doesn't like working for themselves? Who wants to really work for somebody else? As mentioned previously, you can work in your own hours, do as little as much work on the actual property itself as you want. The property is controlled by you, no one else. It's not, no matter what, you're getting this specific amount. You're not getting less, you're not getting more. It's all dependent on the effort, the smart effort that you put into it. Tax benefits. First up, I'm not a CPA. This is not legal advice. This is not tax advice. But there are definitely some great tax benefits when it comes to real estate. I will be doing a completely separate video to this, talking about all of them, and how fantastic it is, and how really your rental income can basically become tax-free through the tax benefits that you get. But again, not a CPA, don't take that as legal advice. But to list off a few, you can generally write off repairs and maintenance on rentals as long as they're ordinary and necessary. You can write off property tax based on, that can be completely written off on a rental property. Depreciation. So if you divide the value of the building by 27.5, then multiply that by the share of the building dedicated to rental activities. So for example, if you're house hacking, you can multiply that by 0.5, but if it's just a regular rental property, then you multiply that by 1, and whatever that value is, you can write off. Interest on a mortgage, if you have a home office dedicated to dealing with it, so many other things, business expenses, insurance premiums, other things like that. Now, the interesting thing about this is that these change year to year, So some of these things that I just listed might not be the same in the next year or the year after that. Definitely won't be the same 10 years from now. But as of right now, the tax system is built up for property owners and entrepreneurs. So you should really be taking advantage of these tax benefits. Now, thank you guys so much for watching. This was my first video. I know it will probably be a little bit weird, a little bit awkward, but I do appreciate it if you stuck through all the way to the end. And I will be releasing weekly real estate related content on this channel. And I hope to see you guys in the next video. Thank you. Bye.